Okay, so when a company like Verizon, I mean, they're so central to everything we do digitally, right?
Mhm.
When they make a big announcement, it's way more than just numbers on a page.
Absolutely. It's like a pulse check.
Yeah, a pulse check on the digital backbone, showing these strategic shifts that, impact your phone bill, maybe even the future of AI.
Hmm.
Today, we're diving deep into Verizon's second quarter 2025 earnings. And our mission here isn't just reporting figures. We want to unpack what's really driving their strategy.
Right. Is it just tweaking the old model?
Exactly. Or are these moves, the big fiber build-outs, the new AI stuff, are they actually redefining what a telecom giant is in the, 21st century? We're
Yeah.
looking for those surprising facts, those aha moments that show the bigger picture.
And to get that full picture, we're drawing on two key sources. First, the official Q2 2025 earnings call transcript that gives us the direct, detailed discussion from leadership.
The unvarnished stuff.
Pretty much. And then we complement that with Verizon's own news release, the one titled Verizon's Stellar Q2 2025 Performance and Raised Guidance. That's their polished story.
Okay.
So together, they really paint a clear picture of how Verizon sees itself, its performance, and where it's heading.
Got it. So we're here to cut through the corporate speak, give you that shortcut to being really informed about Verizon's strategy, its wins, its challenges, all tailored for you. So let's jump right into the big news then. Verizon had an impressively strong second quarter in 2025.
Hmm.
Strong enough that they've actually raised their full-year guidance across several key financial metrics. What does that top-line signal tell us straight away?
Well, it tells us their strategy is clearly gaining some serious momentum. The numbers really speak for themselves.
Like what? Give us some specifics.
Okay, so wireless service revenue hit $20.9 billion. That's a solid 2.2% increase compared to last year.
Okay.
And maybe even more telling, their adjusted EBITDA, that's, a key measure of operational profit, it hit a record $12.8 billion.
A record.
Yeah, up 4.1% year over year. And what's fascinating here is this is actually their second consecutive quarter where they beat their own guided growth range for EBITDA.
Okay, so they're outperforming their own expectations.
Exactly. And crucially, free cash flow, FCF, for the quarter was $5.2 billion. That brings their year-to-date FCF to $8.8 billion.
Right.
And all this strength led them to significantly raise their full-year FCF guidance to a massive range, $19.5 billion to $20.5 billion.
Whoa, okay, that is a huge jump in free cash flow guidance. Why such a big increase? I mean, what does that kind of financial firepower let them actually do?
Yeah, it's a great question. This massive jump, it isn't just good numbers on paper. It gives Verizon significant strategic optionality. Think of it like a rapidly growing war chest.
Okay.
The drivers are really twofold. First, strong cash flow from their actual operations, which tells you the underlying business is getting more efficient, more
That
profitable.
makes sense.
And second, there's a substantial boost from recent tax reform. They estimate that's benefiting their FCF by about $1.5 billion to $2 billion.
Ah, okay. So it's operations and external factors helping out.
Precisely. And this isn't just, a paper game. It's a real shift in their financial firepower. It lets them speed up fiber deployment, invest heavily in that cutting-edge AI infrastructure we mentioned, or maybe even outmaneuver competitors on deals.
So it's really about building that financial muscle to execute their long-term vision.
Mm-hmm.
And Hans Vestberg, their CEO, he's been pretty consistent, hasn't he, about those core financial priorities?
Mm-hmm. Growing wireless service revenue, expanding adjusted EBITDA, and generating strong free cash flow.
Right. Sounds like they're hitting all those notes pretty well right now. Okay, let's transition then. How are they actually bringing in new customers? Verizon managed to add, what was it, over 300,000 net new customers across mobility and broadband in Q2. How are they pulling that off in such a competitive market?
Well, they're being very strategic about it. They call it a segmented market approach.
Segmented, okay.
Yeah. So for consumer postpaid phones, for instance, their gross additions were up compared to last quarter and last year. That suggests good execution on the sales side. And offerings like My Plan, My Home, the new My Biz plan, plus that best value guarantee they keep talking about, those seem to be clicking with customers.
So the value proposition is landing.
It seems so. Now, the wireless market is undeniably super competitive, but their focus seems to be on maintaining financial discipline, not just chasing raw subscriber numbers at any cost.
And their broadband numbers look particularly eye-catching. They picked up 278,000 fixed wireless access FWA net adds, pushing their total FWA base over 5.1 million subscribers now. And Fios Internet also grew 32,000 net additions. That FWA number, 278,000, that's pretty significant, isn't it?
It is, and it really speaks to their ambitious long-term goal for FWA. They want to reach 8 to 9 million subscribers by 2028.
Okay, so they're well on their way.
Looks like it, yeah. What's also interesting is their performance in prepaid. They added 50,000 core prepaid net adds.
Prepaid's growing too.
Yeah, that's 4 straight quarters of positive growth for brands like Visible, Total Wireless, Straight Talk. And they expect prepaid to actually start positively contributing to wireless service revenue growth in the second half of this year, 2025.
So it's not just about adding any customer. It's about adding, well, profitable ones. You mentioned their high-quality, profitable growth focus earlier. What does that really mean in practice, especially in an industry that can be so volume-driven?
Well, for those of you who follow the telecom space, you know there's always that temptation, right? Chase the raw subscriber numbers, even if it means taking a loss initially.
Sure, grab market share.
Exactly. But Verizon's explicit stance here, they said, volume growth is only valuable when aligned with our disciplined financial framework that signals a very calculated shift. Profitability over market share unless the share is profitable.
Okay, discipline.
Right. And you can see this discipline in their consumer ARPA. That's average revenue per account, basically what each customer account brings in. That rose a healthy 2.3% year over year to $147.50. And their overall consumer wireless service revenue was also up 2.3%. It's about getting the right customers, not just packing the funnel.
Let's talk about the bedrock then, the foundation for all of this.
Yeah.
The network itself. Verizon seems to be really doubling down on their leadership claims here. They got impressive recognition from J.D. Power, best network quality for the 35th time.
35th time, yeah.
And Root Metrics named them the nation's best, fastest, and most reliable 5G network. How are they actually sustaining that edge? What's the work behind the awards?
Yeah, the infrastructure deployment is absolutely crucial. Their C-band rollout, that's that key mid-band 5G spectrum, the one that gives you both speed and coverage.
A sweet spot.
Exactly. That's actually running ahead of schedule. They're on track to cover 80 to 90% of their planned sites by the end of this year. And nearly all those sites are now standalone capable, which is important for future 5G capabilities.
Okay.
Plus, their fiber build is also tracking ahead of plan. They're positioned to deliver an extra 650,000 fiber passings this year alone. And this investment, it's already showing direct results. They specifically mention seeing lower customer churn, fewer people leaving in areas where C-band is deployed.
So network quality directly impacts loyalty.
It's a powerful indicator, yeah. Quality seems to correlate directly with retention.
That makes perfect sense. Now, on the fiber side, you mentioned something intriguing earlier, this unique multi-dwelling unit, or MDU, solution. I'm curious, what exactly is that, and how big a deal could it be for their broadband goals?
Right. So this MBU solution, what's really innovative is that they're calling it a world's first in how it delivers very high-speed broadband up to a gigabit inside apartment buildings.
Okay, but isn't getting fiber into apartments usually tricky?
Extremely. Traditionally, getting fiber into existing apartment complexes is expensive, disruptive, drilling holes. This solution cleverly leverages the existing in-building wiring, but combines it with new technology.
Okay. Less disruption.
Right. It overcomes those big challenges and basically unlocks a huge, previously hard-to-reach market for them. And it's not just a trial anymore. They're scaling it up in the second half of 2025. They expect it to be a bigger contributor in 2026.
Interesting.
It really showcases their commitment not just to adding broadband customers, but to delivering a high-quality, innovative connection, even in places that were tough to serve before.
Okay, but even with all that positive momentum, there's always a challenge, right? Verizon did acknowledge elevated postpaid phone churn.
Yeah.
It stayed consistent with Q1 at 0.9% for consumer postpaid. They mentioned lingering effects of pricing actions, pressure from government accounts, and competitor promos. So what are they actively doing about that? How do they plan to keep more customers?
Yeah, that raises the key question. How do they reverse that churn trend? They outline several concrete steps they're taking. One is strengthening those value propositions we talked about, like the best value guarantee.
Okay.
The other really significant initiative involves leveraging AI. They just launched some AI-powered customer experience innovations on June 24th.
AI for customer service. How does that work?
Well, think about having a dedicated customer care person who actually follows your specific request or complaint all the way through to resolution.
Okay, that sounds better than being bounced around.
Right. Plus, 24/7 customer service availability and AI tools that actually help the human agents provide better, faster support. They're even using their retail stores more for that kind of personalized, in-person help.
So attacking it from multiple angles.
Exactly. A multi-pronged approach to really improve that whole customer journey and hopefully reduce the reasons people might leave.
And it seems like those efforts might be starting to work, at least in one area, upgrade activity.
Yeah, that was notable.
After being down for, 8 out of the last 9 quarters, Verizon actually saw an uptick in upgrades in Q2. They said it was driven by that best value guarantee. And they expect mid-single-digit growth in upgrades for the full year. That's a genuine turnaround.
It suggests customers are seeing value in staying and upgrading within the Verizon ecosystem again.
Okay, so beyond just shoring up the core business, the big question is always, where does Verizon go next? What new markets are they looking at? How are they planning to diversify beyond just, selling phone and internet plans?
Yeah, they're clearly looking for substantial new revenue streams. Two big initiatives really stand out from the earnings call.
Okay, what are they?
First, their private network business. This seems to be gaining real traction. They just landed a landmark deal to deploy multiple private fiber networks across the Thames Freeport over in the UK.
Private networks, like for specific businesses or areas.
Exactly. And this isn't just a small project. They described it as the technology foundation for a massive multi-billion-dollar regeneration effort over there. It'll enable advanced stuff like AI, real-time logistics. Very cutting edge.
Okay, so bespoke, high-end networks. What's the second initiative?
The second is their AI Connect offerings. These are essentially high-bandwidth fiber capacity solutions designed for the intense demands of AI. The demand seems to be surging. They said the sales funnel for AI Connect has nearly doubled to $2 billion just since they launched it earlier this year.
Doubled. Wow. So there's huge demand for that kind of AI-ready infrastructure.
Clearly, businesses need that robust, super low latency connectivity to power AI applications.
It really sounds like Verizon's existing infrastructure, especially all that fiber and C-band they're deploying, gives them a pretty significant leg up. They seem positioned to support AI as it moves from, giant data centers out to the network edge for real-time use. But couldn't competitors also do that, use their own networks for AI edge computing? Or does Verizon really have a unique advantage here?
That's a fair question. I mean, lots of players are looking at AI at the edge. But Verizon's specific combination of the sheer scale of their fiber footprint plus the scale of their C-band deployment that offers a potentially unique mix of massive capacity and ultra-low latency. Plus, their established relationships with large enterprises give them a crucial sales channel for these advanced services.
Right, the existing customer base.
Exactly. And speaking of expansion and assets, they also gave an update on that big Frontier acquisition.
Ah, yes, Frontier. How's that progressing?
The regulatory approval process seems to be going exactly as planned. They've already got approvals from 8 states, plus the FCC and the DOJ.
So it's pretty far along then.
Seems like it. The deal is still firmly on track for an early 2026 close. They're targeting Q1 2026.
And what will that mean strategically once it closes?
Well, Verizon plans to give a comprehensive update on strategy, broadband expansion, capital allocation, all that stuff as they get closer to the closing date. But they explicitly framed this acquisition as a significant catalyst for fiber expansion and broadband growth acceleration.
So it fuels their fiber ambitions even more.
Directly aligns with that focus on high-speed broadband, yes.
Okay, all these investments, the fiber build, AI Connect, the Frontier deal, that requires serious capital. How are they balancing all that spending with, rigorous financial discipline and aggressive cost cutting? It almost sounds like two opposing forces.
Yeah, it really highlights their discipline, doesn't it? They've pushed through several significant cost-saving initiatives. That voluntary separation program, the buyout offer, that's complete and already generating substantial savings.
Okay.
They're also actively looking for efficiencies in the legacy parts of the business, like decommissioning old copper networks, and streamlining managed services within the business segment. Remember that HCL deal? That's part of it.
Right, outsourcing some functions.
Even their network team, they said, is finding ways to be more efficient with CapEx, allowing them to hit or even beat their network goals while staying within budget. And their overall headcount, it's actually down 3.7% compared to last year.
So they're trimming costs across the board.
Pretty much. And this discipline approach, it even extends to consciously not pursuing certain deals specifically, low-margin wireless business, or overpaying for volumes. It reinforces that focus on profitability we talked about earlier.
That brings us to a really important aspect when you're managing these huge investments. Debt. How are they handling their debt load? Are they still prioritizing paying it down?
Yes, absolutely. That remains a clear priority. Their net unsecured debt at the end of Q2 was $116 billion. Now, that sounds like a huge number, but it's actually a $6.9 billion improvement compared to the previous year.
Okay, so it's moving in the right direction.
It is. And their key leverage ratio, net unsecured debt to consolidated adjusted EBITDA, that improved too. It's down to 2.3 times, which is 0.2 times better than a year ago. They emphasize they're continuing to focus on reducing debt, especially ahead of closing that Frontier transaction. It reinforces their commitment to a strong balance sheet, giving them financial flexibility.
Okay, and just tie it all together financially, their overall capital allocation framework, their playbook for using cash, that hasn't changed.
Nope, remains unchanged. Priority 1. Strategically invest in the business, especially those mobile and broadband networks. Priority 2. Support a healthy and growing dividend. They highlighted 18 straight years of dividend increases.
Impressive consistency.
It is. And priority 3, diligently pay down debt towards their long-term leverage target, share buybacks. They noted those will only be considered after they hit that leverage target. It's a very clear, very consistent playbook for investors and the market.
Okay, let's turn finally to the Verizon business segment. That part of the company seems to have shown significant improvement, particularly on the profitability side. How are they managing that turnaround?
Yeah, what's really impressive there is that the business segment's EBITDA has now grown for 3 consecutive quarters year over year. That's a solid trend.
Okay.
Now, total Verizon business revenue was actually down slightly, 0.3% year over year, landing at $7.3 billion. But importantly, business wireless service revenue was up 1.6%.
So wireless is driving growth there, too.
It is. They added 65,000 wireless retail postpaid net adds in business, including 42,000 postpaid phone net adds. And that's despite facing some pressures in the public sector, government accounts.
Right.
And those contributions from private 5G networks we discussed and the new AI Connect offerings, those are really helping to offset some of the expected decline in their older traditional wireline business services.
So new tech offsetting legacy decline.
Exactly. Plus, that managed services transformation, the outsourcing initiative, is providing significant cost benefits. And they're being really disciplined about moving customers off old legacy products and, again, avoiding low-margin deals.
And the bottom line for the business segment.
The bottom line looks strong. Business operating income jumped 27.6% year over year to $638 million. And their EBITDA margin was a healthy 22.9%. So the focus on higher value services and cost discipline is clearly paying off there.
Okay, so boiling it all down, Verizon's Q2 2025 performance really shows a company that's, well, executing a disciplined strategy, leveraging those huge network assets they have, and pushing to these crucial new growth areas like private networks and AI Connect.
And doing it all while keeping a really tight grip on the finances, boosting profitability.
Right.
Stepping back, what this really illustrates, I think, is how a legacy giant, a company like Verizon, is actively trying to reinvent itself, in this incredibly fast-changing tech landscape.
Yeah.
And understanding these details, it isn't just about Verizon stock or something. It helps you, the listener, see the broader trends shaping the whole telecom industry, how connectivity itself is evolving way beyond just making phone calls. It's a pretty compelling case study in strategic transformation.
Absolutely. Which leads to a final thought, maybe something for you to chew on. Given Verizon's really aggressive fiber build-out, that significant Frontier acquisition adding even more fiber, and this increasing focus on AI right at the network edge, how might the very definition of a telecom company fundamentally shift over, say, the next 5 years? Will that line between being just a network provider and being a cutting-edge technology enabler, will it blur even further for a company like Verizon? Something to think about.